Two, what's going on, y'all? Happy Wednesday. It's the 29th of the month. One day left in June. Hope everybody's had a great day. So the team.
What's good? What's good, y'all? We're gonna get this going.
Yeah.
The hardest working men in showbiz.
You may never see nothing like this again.
It's gonna be rare. It's gonna be
You may never see nothing like this again.
extremely rare. I'll tell you that much. Let's get that call out. Try to get this going the right way. Hope everybody's doing well out there. Jam-packed week for us, man. We had Steve Harvey from Market Mondays. Did an episode yesterday. I got Kai from FaZe Clan. And we are back today to round out the week with a live with MG the Mortgage Guy on how to buy a home in 2022.
Yeah.
So, the grind don't stop. We are in our Atlanta headquarters. If you notice the decor. So yeah, man, it's a vibe. Just finished a dope interview. So
Like literally.
Yeah.
That's gonna be coming your way real soon.
Yeah.
Shout out to Houston. All the restaurateurs out there. Shout out to our H-Town family. Chris Senegal, Mike Brown, Jazz, what's going on? Who else we got out there? Slim Thug. Everybody in Houston, what's going on? Atlanta, what's up? New York, we will be home shortly. We will be home. Heard it's hot out there. Our brother MG about to jump on right now.
He text you?
Yeah, just hit me.
Yes. So open enrollment, this is what we do every Wednesday, the last Wednesday of the month, every single month for EYL University. It gives you a peek into EYL University, and we pick different topics. And just felt like this month, it would be a great time to address how to buy a home and different aspects of it, because we've been talking a lot about, interest rates going through the roof, and if homes are going to, have a decline and different things of that nature. So a lot of people are nervous, a lot of people are antsy, a lot of people are on the fence if they should buy a home or not, because, the climate, the environment that we're in right now. So felt like it'd just be a good time to just have that conversation, and not only from a personal property standpoint, but also from an investing standpoint as well. So I just feel like, it would be a good time to just revisit this conversation. And middle of the year, looks like we're going to be headed towards a recession, officially announced in a few weeks. So real estate, we can never talk about real estate enough. So I feel like now is a perfect opportunity to talk about real estate. And this is why we chose this topic right now. So, and then of course, MG is somebody that, only makes sense to have this conversation with, because he is not only, EYL alumni, but a pioneer in the space, and somebody that has helped pioneer the whole financial literacy movement when it comes to real estate. So, always good to hear his perspective from somebody that's actually on the inside as a loan officer, not just somebody that just invests in property, somebody that actually is working in the field day to day, getting people approved for mortgages, getting people funding to buy homes. Like, this is what he actually does. So yeah, man, there he is.
And MLS 58700, also known to you as MG, the mortgage guy.
What's going on, brother? Yo, what's good, fellas? What's good, man? How y'all feeling, man?
How you feeling, man?
I'm not 100%. I ain't gonna hold you up, but I'm here. I'm alive. I'm blessed, and I'm ready to show the fuck out, man. Let's go, man. I came here for violence today, man. Let's go. I've been cooped up for a whole week. Let's go, man. Where my earners at, man?
Let's go.
MG, I gave you the co-host joint, so we in for a treat tonight. I saw what's happening.
So before we start, I just definitely want to give my condolences to EYL alumni that passed away today, Darryl Freeman Jr. If you're familiar with Darryl Freeman, he came on the episode a while ago, like a year and a half ago, and gentleman from Nashville, Tennessee, that was big in real estate, actually. Slim Huskies, another EYL alumni. He invested in their company and was helping mentoring them, and started his company and sold it for $22 million. And it's a great story. And he gave a lot of great insight on how to evaluate a business, how to sell a business, how to buy real estate, different things of that nature. And somebody that we became real good with. And he actually was a paid member of EYL University also, and added a lot of value to EYL University, and added a lot of value to anybody online that was interested in entrepreneurship and investing. So sad to hear about his passing today. Definitely send our condolences to his family, to his friends, and EYL is we could say the alumni because it is a fraternity, and it's some people we speak to more often than other people, but when you come on earn your leisure, you definitely become part of the family, and we develop relationships with a lot of the people. So this is the first person that has ever come on our platform that has passed away. So that's something that's new to us, but we all know that life is short, life is fragile, and nobody lives forever. So the key is to make the most out of life that you have, appreciate it, make wise decisions, and leave your family in a better position when you pass away to have peace of mind, have generational wealth, and create some level of stability. So I'm sure that he did that. So yeah, just wanted to give my condolences, speak a little bit before we start this, because we're gonna be talking about real estate, we're gonna be talking about a lot of money, but ultimately we got to keep in mind that life is the most important asset that we will ever have, and we can never take it for granted, because just to be able to breathe is a blessing. Just to be able to have your right mind is a blessing. So we're all blessed. At the end of the day, if you're watching this, you're blessed. If you're able to type something in the chat, you're blessed. If you're able to speak, tell a friend, you're blessed, and we're blessed to be able to be here in front of you and to speak. So yeah.
Yeah, and when we talk about legacy, and I said this kind of a few times, but legacy is really written by the people you've impacted. And so I'm sure his legacy will live on, especially through us and the people he's mentored, his business partners, Sim and Husky. And he's always, like Rashad said, he's a man who's always offered guidance, was somebody that we could text and call on when we needed him. Even invited us to visit his own island with his family. So a gracious man. And again, we offer our condolences for his untimely passing, but we're gonna keep the legacy going. Entrepreneurship was something he was big on. Creating businesses was something he was big on, but understanding how to evaluate and potentially sell your business was something that he was big on. And so, we're gonna keep the legacy going, and I'm sure our earners in here and the people that are watching on Tube, y'all will as well. So again, rest in peace to Darryl Freeman Jr. and condolences to the family.
Yeah.
Yeah, he was an active earner too at that. He was he was active, and for a man to have made that amount of money, and he's in a private Facebook group, he paid to be in there, and giving a lot of insight to the earners almost daily. And what he did online, he championed being the free game champ, basically, and I think that's something that all three of us and our whole movement, what we do too is try to give a lot of free game more than paid, right? So he was definitely a legend, and rest in peace to him and his family, because it's sad, man. You never know. You never know. And it's crazy. I was thinking, like, I haven't seen him a lot this year too, because normally he's super active online. And just to hear the news today, it was just kind of took a step back. So rest in peace to Darryl Freeman Sr. and condolences to his family, and God bless that man.
Yes. So we're going to get into this. We'll talk about EYL University, but I want to talk about that later on. I feel like we can get into the programming, get some education, and then we can kind of talk about that. So yeah, we're not even gonna waste no time. MG, the floor is yours. We're gonna talk about how to buy a home. This is something that's very, very important. A lot of people want to buy homes, whether it's your first home, second home, third home, investment property. It's a lot of fear in the marketplace. So let's give the people some education.
Well, Warren Buffett once said the famous quote, right? When people are being greedy, be fearful. And when people are being fearful, be greedy. So I need everybody to understand that this is one of those times, and it's going to be better than the pandemic. I'm telling you. I told you guys 2 years ago during the pandemic, April 2020, I was on the Breakfast Club and I was on there and I told y'all when they open up America, the floodgates are going to happen. The government's going to do everything in their power to prevent a crash. And they did. In the real estate space, I'm speaking specifically. And it went crazy. And I was online screaming to the top of my lungs, you need to go and get this cheap money because it won't last forever. As you all can see, it didn't last forever. It lasted for about 18, 20 months. And now interest rates have skyrocketed. But I want everybody to understand that presents probably the best opportunity for real estate people in the next 2 years because there's going to be less buyers in the market. There's going to be more inventory that's going to hit the market. And especially if you are investing, this is going to be probably the best opportunity for you as an investor to buy real estate. Just pay attention to everything that's happening in the news. They are spewing fear left and right when it comes to housing. So this is the time, in my opinion, where you guys need to really start thinking like investors. Even if you're buying your first home, think like an investor. And this is something I've been screaming for the top of my lungs also. Stop being emotional. Think like an investor because this opportunity will pass you by if you don't take action on it. Regardless of where the interest rates are right now, still a great opportunity to buy. So I'm gonna share my screen, man. Let's get busy with this real quick. Now you gotta forgive me. I'm new to this Mac. Tukes did all types of new stuff in the studio. I'm a PC guy, so I don't even. He told me I gotta swipe with 3 fingers. I'm like, what is this, bro? I don't know what you're talking about. So y'all gotta forgive me. Where I don't even know how. Okay, share your screen. I think he said share my desktop. Right?
Yeah, that's
How you do share desktop? Oh, share desktop 1. Okay. You see, I don't know what I'm doing, y'all.
now we see it. We can see it now.
You see my desktop now?
Yeah.
All right, y'all see this?
Yeah, perfect. Yeah, you're good.
Yeah.
All right, so I'm not the most tech guy, but Tukes, since I just came off of COVID, he said I'm not being next to you until next week. Rightfully so. So, all right, let me figure out how to maximize this. How do you maximize your
His slideshow.
His slideshow.
Slideshow. Where you see that at?
It's right there.
Next to share.
Next to the yellow share button. You are getting a tutorial on how to work a computer.
Go back, bro.
Where you see slideshow?
So you see.
Move the cursor to the right.
Okay.
Up, right there.
Right. No.
Down.
Oh, slideshow, right here. Yeah. You know, I couldn't see it because you guys was in like the picture-in-picture thing was there.
Gotcha.
Okay.
Now you good, right?
Now we good. All right, y'all. So this Matt Garland, NMLS number 58700, better known as MG, the mortgage guy. Let's get busy. We're going to teach y'all how to buy a house in 2022. Who am I? I am the mortgage banker, the mortgage goat, the mortgage king, whatever you want to call me, just call me something. I've been in the business for 19, going on 20 years, funded almost $1 billion. That's a billion with a B in my career. I'm one of the top mortgage people in the country. I run a division of a mortgage bank. We are here to help you guys achieve your real estate goals, whether you're looking to buy your primary residence, buy a secondary home or a vacation home, or purchase investment properties. Me and my team could help you achieve your goals, all right? Just hit the link in my Instagram bio, and we will take care of you. All my resources are there, all right? So today we're going to keep it real simple. I'm going to give you a lot of information. If you're ready for some information, put some fires in the chat. MG is ready to go. We're going to teach you how to prepare your lender file. I'm going to teach you how to hire the right lender, right? With low programs, and I'm going to go briefly on a couple programs. I'm going to discuss closing costs, the underwriting process, then I'll open it up for some Q&A. But there's going to be a lot of information in this, and I'm going to take you to a couple different websites also. So I'm going to need you guys to really focus in on this because I want to show you guys how to go get certain information on your own versus it being in a slideshow. All right, preparing your lender file, most important. A lot of people are not organized. This is one of the biggest problems that I see when people are looking to purchase real estate. They are not organized. So one of the key things I want to tell you guys, the document checklist that you see here is pretty standard across the board for all lenders. And I love to see all that fire in the chat, YouTube. Y'all keep it going. Let's hit that like button, share this with 10 people immediately. All right. And y'all screenshot this slide because these are the documents that you are going to need for any lender that you go to in America. All right. Your last 2 years of W-2s, you're going to need a 2-year work history. Now, if you are a W-2 employee, you do not need to show tax returns unless that lender has overlays, which are guidelines on top of guidelines. But for the most part, if you are a simple W-2 employee, you do not need to show your tax returns. We do need to see a 2-year work history. Now, one of the biggest things that people always tell me is, Matt, I had 5 jobs in the past 2 years, but they were all W-2. Does this disqualify me? No, it does not. Any gaps in employment, we have to document with a letter of explanation that gap in employment. All right. If you go from working from Target to UPS to Best Buy, that's okay. As long as your income is the same or increasing, you won't have no issues. But if your income is decreasing, then that could be an issue. All right. Now, I want to say another thing. If you go from W-2 to 1099 or self-employed, you start your clock back over. So if you go from working at the post office and then you want to open up your event space and quit and fire your job, then guess what? You start all over. You start all over. All right. Last 2 years tax returns. This is truly only if you're self-employed or if you own real estate investments is where we have to look at your last 2 years tax returns if you are self-employed. Last 30 days of pay stubs. We need all pay stubs for the past 30 years. So if you get paid bi-weekly, we need the last 2. If you get paid weekly, we need the last 4. If you have multiple jobs, we need to have all the pay stubs for multiple jobs. Now, I'm glad I just said that to myself. Multiple jobs. If you work 2 jobs at the same time, you need to have a 2-year consistent work history of working those 2 jobs. So let's just say you work at UPS in the daytime and then you work at Target overnight, and you want to use both of those incomes to help you qualify. That is okay. We just need to show that you worked at both of these jobs consistently and consecutively at the same 2-year time frame. All right. Because a lot of people start new jobs and they say, I've been at this new job for a year and they want to use that income won't work. All right. So I just want you guys to please understand that if you have multiple jobs and you're working them simultaneously, you need to have a 2-year history for the lender to use that. Last 2 months of your bank statements, all pages, very important. If your bank statement says page 6 of 7 and that last page is left blank, the underwriter will still need to see page 7. Even if it says this page is left blank intentionally, we still need to see that statement. Now, with your bank statements, what we are looking for is large deposits. So you don't want to have too many large deposits, especially cash, going into your bank account because we cannot document that transaction. Okay. If you have NSF fees, non-sufficient funds, you don't want to show those bank statements because if you cannot manage your money and you go in negative every month, then why would a bank want to give you a loan? That shows you have no discipline. So you have to make sure that there's no NSF fees. What I try to tell everybody is this, right? If you are purchasing a home, even if you're preparing right now, you say, I want to buy in 6 months or 8 months, open up a separate account, call that your real estate fund, name it whatever you want to call it, right? And then if you're going to use your direct deposits, if you're going to use whatever money that you're making that you can legally document, have that money only deposited into that account and don't try to do minimum transactions in that account. That way you eliminate a lot of headache and a lot of future paperwork. Copy of your ID has to be a government issued ID, driver's license, passport, and it has to be valid. If you're getting a gift, which is allowed for most traditional programs, conventional, FHA, VA. You can get a gift. It just has to be documented with a gift letter, and we have to see the donors' bank statements showing them that they have the money and they're able to gift it over to you. Now, what a lot of people try to do, and I'm gonna tell you this right now, don't do this. They will have mattress money and say, hey, I got 50K on my mattress or 20K on my mattress. I'm gonna give it to my mom, let her deposit it, and then she's gonna wire me the money as a gift. It doesn't work like that. You can't do that. We're gonna see that all day, and we won't be able to use that money. So if you're gonna get a gift from a family member or a parent or sibling, you have to make sure whatever amount that they're gifting you, that they have that money in their account already. And then you're going to need a completed loan application. Whatever lender that you're going to do business with, they will be able to provide you with that online loan application. So again, screenshot this, save it, and study this. All right. Okay. How do I go to the next one? I hate this Mac. All right. So let's go. Oh, you see, the stupid Mac. All right, here we go. I'm giving y'all the juice early. All right, now that you have your documents and you're ready to go to get pre-approved, but I need you guys to understand the difference between a regular traditional pre-approval and the fully underwritten pre-approval is, right? A regular pre-approval is basically a letter that is issued by a loan officer at the bank. They have reviewed your income, your assets, your credit report, and they have determined that based off of their calculations that you can get X, Y, and Z amount of money. This is not a commitment to lend from the bank. I need you guys to all understand that a loan officer like myself, although I am a great loan officer, I do not issue loan commitments. The only person that can issue a loan commitment on behalf of a bank is an underwriter. So to be quite honest with you, that pre-approval letter that even myself and my team is going to give you, it's not worth the paper it's printed on, because people can have a pre-approval letter and still get declined once they get into contract for a house to buy. This happens every single day nationwide. Reason being, sometimes loan officers make mistakes and they do not calculate your income properly. These things happen all the time. So I need you guys to understand pre-approvals are worthless. Although it is needed, and I want you guys to please understand of what I'm really truly saying here. It is needed for you to go out there and shop for a home, this, that, and third. It gives you an idea. If you got a great loan officer like me, I like to tell people my pre-approvals are solid gold because I pre-underwrite because of my skill set, right? But not every loan officer is built alike. So what I always recommend, and my team offers this service also, is a fully underwritten pre-approval. This basically means that the loan officer, not only did he review your income, credit, documentation, etc., that he or she is going to package up that loan as if you're in contract, and then now they're going to submit that loan to underwriting, and the address is going to be a TBD address, to be determined. And now the underwriting department from the lender, they will actually review your file as if it's a real deal, meaning you have executed contract of sale. They're going to review it and they're going to issue what's called a conditional mortgage approval or conditional loan commitment. And this means that the lender is committing that they will give you X, Y, and Z amount of dollars based off of you meeting these conditions. Now, when we get later into this presentation, we're going to talk about the underwriting process and conditions and things of that nature. But what I love about having a fully underwritten pre-approval, this gives you all the work done up front. So you know exactly what the lender wants to see to close. 3 things they're going to want to see is a contract of sale, a clean title report, and appraisal. right? Obviously, you don't get those things until you sign contract, but you'll have everything else that that underwriter likes or doesn't like on that conditional mortgage approval letter. So now you can start working on that credit approval side while you're out here shopping. And also, once you get, so let's just say they want a letter of explanation, they want to see the gift funds, et cetera, et cetera. You can submit all these, what we call conditions, to the underwriting department, and they'll clear those conditions. So that way, by the time you find a house, only thing you need is probably 3 or 4 things and you can close. Now, what this is going to do, and I'm highly recommending everybody who's watching this live and who's going to watch this on a replay, if you're buying a house in today's market, if you want to be competitive, you need a fully underwritten pre-approval letter, because this is going to give you that ability to close fast, 2 to 3 weeks, right? In most markets, people are still waiving financing contingencies, meaning they're waiving their right to financing. So if they get declined by a bank, it doesn't matter. They still have to buy a loan. So when you are in, and that's typically for cash buyers, you see that, but you have some buyers who are getting financing who are going through this process are also waiving their financing contingencies because they know they have a mortgage already. All right. So this gives you a competitive advantage, especially if you're someone who's putting down 3.5, 5% down payment in today's market. All right. Now, this is all going to be hard credit pulls, pre-approvals, whether you go with a fully underwritten pre-approval or a traditional pre-approval. It's all hard pulls. Okay. Pause. Hiring the right lender. All right. Hiring the right lender is very important. Like I said to you guys earlier, not all loan officers are built alike. Now, these are the 3 types of companies that originate loans. And I always get the question of what's the difference between a broker and a banker and a retail bank. So I want you guys to screenshot this slide also, so that way you can go back and you can reference this on your own. A mortgage broker is basically a middleman, right? A mortgage broker does not lend money. They are on board or signed up with several lenders, and their job is to quote unquote shop through those lenders to see who you can get the best deal with, right? A mortgage banker is like MG, where we lend, we process, we underwrite, we fund, we do everything in-house, okay? But we also sell the loan to the retail big bank because we're not set up for servicing. The retail big bank is more so like the Chase, the Wells Fargos of the world, where they offer more products, not just mortgages. They'll offer you check-ins, savings accounts, personal loans, auto loans. Credit unions would kind of fit into this category as well. All right. Now, the difference between the all 3. Look, first of all, I want to just make this clear. When you're working with any company, a Chase, a Wells Fargo, Loan Depot, any of the big brand names like the Quicken Loans or Rocket Mortgages, whatever you see out there, you have to remember you're not working with that company. You're working with the loan officer. So you have to make sure that you're interviewing these loan officers, right? To make sure that they fully are capable of helping you achieve your real estate goal. If you are looking to buy your first primary residence, one of the questions that people always ask me, yo, Matt, what questions do you ask when you are interviewing these people? I always tell people to ask questions you already know the answer to. But the very first question should be, if you're buying your primary house, ask them, are they a homeowner? Very simple. Are you a homeowner? If you're looking to buy an investment property, ask them, do you own investment properties currently? I am of the firm belief, and this is no disrespect to anybody in my industry who does not own a home or investment properties right now, but I am on the firm belief that if you are going to work with someone, they should actually own real estate, right? Because how can they really identify with you, all right, and the process of what you're going to go through? That's just me personally. So these are some of the questions that I will ask, and then ask some questions that you already know the answers to. right? You may know a little bit about FHA. You may know a little bit about conventional. So ask them 3 or 4 things that you know the answer to, like the back of your hand, and just see how they're going to answer those questions. You'll be surprised that a lot of people just don't know what they're doing. And by you asking questions you already know the answer to, you can kind of get an understanding of their knowledge base, and then you can kind of dig a little bit deeper from there and determine if he or she will be right to be a part of your real estate team. Because you have to remember, guys, whether you're buying your first house or your 10th house, this is a business. Real estate is a business. If you can file it on your tax returns and get tax deductions, it's a business. I don't care if you're going to live in it. I don't care what nobody tells you. So you have to always remember, you are the CEO of your business. You are in charge. You have to put your team together, and you have to make sure that everybody on your team, lenders, realtors, attorneys, whoever it is, everybody has your best interest in mind. All right. Always remember that. So these are the 3 types of companies that originate loans. I just want to give you guys a little bit of game on this so you can kind of understand who's who and what are the players. All right. Let's talk about some loan programs. Whew. All right. So I'm going to stick to the usual suspects tonight. We got a minimum 580 credit score for FHA. 3.5% down payment is required. Max seller's concession is 6%. A seller's concession is when a seller agrees to pay a portion or all of your closing costs. Now, a seller's concession is not guaranteed. A seller's concession gets included into your loan amount only if the house appraises for the higher value. So I'm gonna give you guys a quick example, and I'm gonna use easy numbers just as an example. If you're buying a home for $100,000 and you want to get a 6% seller's concession, which is $6,000, right? A 6% seller's concession is $6,000 on $100K. That means $106,000 is what the house has to appraise for in order for you to get a seller's concession. And now your down payment is based off of the $106,000, not the $100,000. The seller will still net the 100, but that 6,000 is increasing your financing so you can get a credit for your closing costs. That's how a seller's concession works. So if you're in a competitive market like we are now, I believe the opportunity for buyers to get seller's concessions are going to come back as interest rates skyrocket. So I will encourage all my buyers who are watching this, closed mouth does not get fed. I repeat, closed mouth does not get fed. It doesn't hurt to ask, but consult with your real estate professional who's making the offers on your behalf to see what the market is dictating at that moment before you ask, because you don't want to put yourself at a disadvantage at the same time. All right. 1 to 4 family, FHA approved condos and mixed use properties are allowed with FHA. Now, for those of you who do not know what a mixed use property is, this is basically a commercial building. It will have, typically in the Northeast, how a mixed use property looks is a storefront on the bottom and residential units on the bottom. Think about your local bodegas, right? That is mixed use properties. The key with the mixed use properties, for it to be approved for FHA, it cannot exceed 4 total units with the commercial and the residential, and the residential units have to be 51% of the livable square footage. So if you can find a mixed use property, this can be a gold mine for you first time home buyers, because now commercial rent is going to be higher than residential. So eventually this will give you more cash flow. So this is a great opportunity for those buyers out there who live in areas where there are these type of properties to buy a commercial building with as little as 3.5% down payment. All right. 75% of the rental income can be used to help you qualify on a 2 to 4 unit property. So easy numbers for you guys right now. So if the rental income is $1,000, the lender will use $750 of that $1,000 to help you qualify for the loan, even if the property is vacant. Okay? 3 to 4 unit properties or triplex and quads in certain areas will require at minimum 3 months of reserves. What are reserves, MG? Reserves are your mortgage payment times 3. So if your mortgage payment is $1,000 a month, then you need to have at least $3,000 post closing, either in your checking, your savings, your brokerage, your 401k. It needs to be able to be liquidated, obviously, so the bank will want to see proof that you can liquidate it if needed to. But as long as you have it, then boom, you will qualify. Another thing about 3 or 4 family units, very important. I didn't put this on the slide. This is called the FHA self-sufficiency test. The FHA self-sufficiency test, very important. What this basically means that it doesn't matter if you qualify, you've been pre-approved. If you're looking to buy a 3 to 4 family, if that house is not self-sufficient, then FHA will not fund that 3 or 4 family unit. So for an example, let's just say if your mortgage payment is $1,000 a month and you're buying a 4 family unit, and let's just say all of the rental unit on this property equals up to $1,000 a month. So let's just say $250 per unit. Again, I'm using real simple numbers for you guys. We're going to use 75% of that $1,000, which gives you $750. But your mortgage payment is $1,000. So now that property is negative by $250. So that property is not self-sufficient. So after that 75% value that's taken away, the mortgage, that 75% needs to be $1,000 minimum to cover. So in that case, you would need at least a $1,500 mortgage at a $1,500 rental income to qualify for the FHA self-sufficiency test. So that's very important, guys, for those of you out there who are looking to purchase 3 and 4 family properties with FHA. It's very important you understand the FHA self-sufficiency test. If you have a pre-approval for a 3 or 4 family, contact that loan officer and make sure that they understand the FHA self-sufficiency test. All right. Grants, gifts, 401ks can be used. Co-signers can be used. Max loan amount are based on the FHA county loan limits. Easiest way to find your FHA county loan limits is just Google your county and just put, if I'm in Nassau County right now, so I'll put Nassau County FHA 2022 loan limits and it'll come right up, right? So, but you have to check because certain states like New York, this is a high cost area. We can get approved for more money. Like a 4 family, we can go up to 1.9 million. In other areas, you can't go that high. So you have to really check to see if FHA will even allow because of those county loan limits. And most importantly, FHA is only for primary residents only. When you are speaking to a lender, take the word investment out of your vocabulary. Yes, we know it's a multifamily and it will be a quote unquote investment, but you have to start using the terminology owner occupied multifamily. And FHA requires you to live in this for 1 year. After 1 year, if you want to move out and live your best life, go right ahead. But don't commit mortgage fraud, guys. Don't commit mortgage fraud. All right, let's get busy. Let's talk about some student loans because a lot of you guys got student loans. If you got student loans, please type yes in the chat, please. If you have student loans, please type yes in the chat while I take some quick water break. Troy Shot, I'm good on time?
The world is yours, man.
Yours. You know that,
The world is
man.
yours.
All right, say no more.
Don't commit mortgage fraud.
Please, number one, take anything from this night.
I had to say it 3 times, bro.
This is a message brought to you by the good folks at UIL.
Please.
This is disclaimer. Guidelines. All right, so we got a lot of people in the YouTube chat that talking about they got student loans. So then you guys need to go ahead and screenshot this if you are a FHA potential borrower. The great thing is FHA changed the student loan guidelines about a year ago, which was a home run for you guys. This is breaking down the calculations of it, right? So FHA uses the payment listed on the credit report or the account statement, but if the loan is deferred or forbearance, the lender would use a half a point of the outstanding balance. Let me give you a couple examples. If the payment on your credit report, let's just say you owe 200,000 K in student loans and your credit report shows that your monthly payment is $300, the lender will use the actual documented payment on your credit report, $300. A year ago, that was not the case. The lender will probably use close to $2,000, a 1% rule, right? Payment not on a credit report. If your balance of your federal loans is 50K and the monthly payment on your credit report is zero, the lender will still use $250 as your payment when calculated into your debt to income ratio, although you have a zero payment. Why? Because we're using a half a point of that 50,000. A year ago, we were using 1%, and it would be $500 incorporated into your debt to income ratio. If the payment is zero on your credit report, let's say you owe 70K in federal loans and your credit report shows a monthly payment of zero, the lender will use $350 for your payment unless you ask the servicer to recalculate the payment due to a significant change or family size. That could be known as an income-based repayment plan, right? If your loan is in deferment, if you owe 100K in federal loans and your credit report shows that the loans are in deferment, the loan officer will use $500 as your actual monthly payment unless you can document from the servicer that you have a lower payment under income-driven repayment plan when that deferment ends. So guys, these rules completely changed, and FHA and conventional had boxed out so many people with student loans because of the stupid ass 1% calculation, right? Even though you wasn't paying that much, we still had to calculate 1%. With these new options that's available for you, the government understood and understands that it's difficult for people who are going to school and coming out with large debt to buy real estate. So they're trying to encourage home ownership. So they changed the guidelines, which I think is a home run for everybody who typed yes in chat that they have student loans. So again, screenshot this, study it, and let's move forward. Let's talk about student loans that are in collections. A lot of you are in collections. You are default on your student loans. Please understand, if you are in collections or default, you will not get a loan until you take those student loans out of default or collection status. So please, 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 even if it's not popping up on your credit report, remember, lenders are they're basically doing background checks. We run a system called caveats. We will find that you have some debt, some student loan debt, and we will tell you, nope, you're declined. So if you know you have that debt, work out some payment arrangement and move forward. How to find grants. I want y'all to all screenshot this, okay? I want y'all to all screenshot this website, and I'm actually going to try to go to this website. Let's see. Can y'all still see my screen?
Yeah, we can see it. Yeah, we see it.
All right, so let me see it. I want to move this how you move this stupid Zoom bar? Yo, who said a Mac was good? Shout out to Apple, though. But I can't even.
Just click one of those things right at the top and then type in the website.
No, I have it already open, but I can't move the stupid bar. All right. Why is the bar not moving? Ah, there we go. There we go. There we go. There we go. Bet. Here we go. All right. Can y'all still see my screen?
Yeah, you good.
Bet. So we at the local home buying, right? So remember, I was just here. This is the website. Let me go back to it real quick. As you can tell, I'm not that computer savvy. So I'm back at the website, HUD.gov/buying/local buying. Somebody type that in chat. HUD.gov /buying/local buying. All right. Ari, I see you in the YouTube chat. Put that link in the chat for me, Ari. So this is the website. This is what it looked like. A lot of people don't even understand that there's a lot of money out there, especially through a lot of local programs. And people are always asking me, how do you find this money? Well, this is one website that people don't know. You see, you have all 50 states right here. So I'm going to pick a state, right? Give me a state. Somebody give me a state. Troy, give me a state.
California.
Let's go to Cali. California. All right, so we're in Cali. So you see it says home ownership. You got the getting started. So if you look right here, it says buying a home. So you can even see if you got HUD homes for sale right here. You got home ownership vouchers right there, right? You even got stuff for home repairs and avoiding foreclosure. But let's talk about assistance and programs. Click on that. Now, as you see here, homeownership assistance for California. You've got statewide and regional programs. And you have all the programs right here. Hell, you can even go by sort by city or county, right? So let's go sort it by county. Where's LA? LA is, let's see. Let's go to Fresno. Let's see what's in Fresno. No, it wants me to leave. I'm not going to take no chance. I'm not going to leave the website because I don't know. But y'all see how easy that is, right? Let's go to another state, right? Let's go to Illinois since it's right here. Same thing. Real easy to find. Look for buying for a home. Home ownership assistant programs. You go right here. You scroll down. They got all the statewide and regional programs. All right here for you guys. Programs by the city. You got contact information right here. You got who you can contact for what city it's in. It's all right here, ladies and gentlemen. It's all right here, right under your nose. And they don't talk about this stuff. And it's very simple and easy to find. I'm going to go to New York because we're in New York, right? Assistance and programs. And then you have all the New York programs, and even by city, by town. You got Long Island, New York, Hudson Valley, upstate. And you have contact numbers. You have websites, emails. I mean, you have everything that you need up here to find you some free money. All right? Everything you need up here to find your money. And New York got a lot of money. You see how long that list was. So this is what I want to explain to you guys. You have to do your homework. You have to do your due diligence. And this is why I want to take you to the website versus me just having this on my PowerPoint, because I want you guys to be able to find this stuff on your own. All right? So again, the website is HUD.gov/buying/local buying. Okay? There you have it. In my Rashad voice. Let's get to conventional financing. We're heating up now. 620 minimum credit score, minimum down payment 3 to 15%, depending on what type of property you're buying, whether it's a one family or multifamily. Max sales concession allowed is 3%. You can buy 1 to 4 family and Fannie Mae approved condos and co-ops. I didn't put co-ops up there, but co-ops as well. Max loan amount is based on Fannie Mae loan limits. Again, all you have to do is Google Fannie Mae 2022 loan limits, and you will have all the information you need right there. Grants, gifts, and 401k is allowed. You have to live in the property for 1 year if it is your primary residence also. Now, we're going to take you back to another website. Now, before we get there, let's talk about the Fannie Mae and Freddie Mac student loan guidelines. It's pretty much the same thing, but I like Freddie guidelines better. So if you are going conventional and your student loans listed on a credit report is zero, or if it's deferred or in forbearance, the lender's going to use the 1% balance to calculate it. So if you have that situation, you probably don't want to go Fannie Mae. You want to go Freddie Mac, because Freddie Mac is like FHA, where they'll use 0.5% of the loan balance to qualify. So the examples that I gave you guys earlier on how to calculate is the same exact for both Fannie Mae and Freddie Mac. But if you're going conventional, with student loans, your best bet is to ask the lender or tell the lender, not even ask, because you're the boss. You tell the lender you need to have a Freddie Mac backed conventional mortgage because of your student loans. Okay. And yes, for those of you on YouTube who keep asking, will this be saved on the channel? Yes, it will. This is free game university right now. You're welcome. All right. Two of my favorite programs with Fannie Mae and Freddie Mac is Fannie Mae Home Style and Freddie Mac Home Possible. Let's go to the websites. Let's go to Home Ready first. So all you got to do is Google Fannie Mae Home Ready. Go to Google and you will see the websites will come to the top. Now, I'm bringing you to this website on purpose because it's very important that you understand these programs and what these websites look like, right? Because these websites are very, very, very important for you to navigate. You have all the information that you will need on these websites right here alone. So I'm going to get you guys a little bit familiar with this. Now, when you're dealing with Freddie Mac or Fannie Mae Home Possible, this is all income based. All right. So what I mean by that, and this is the Home Possible website, right? Just get you guys a little bit familiar on how it looks. But let me go back here, right? So let me Google something. So let me go Fannie Mae income limits, right? Fannie Mae Home Possible, Home Ready, income limits, right? So this medium income is very important. So if you're looking to get qualified for this for this program, you have to, let me just hit this. You can't make more than 80% of the area medium income. All right. So again, how I got to this is all the thing I did was Google Fannie Mae Home Ready income tool. And this map will show up. Now I'm gonna punch in a zip code. I am in Valley Stream right now. So I'm going to type in Valley Stream zip code. And now you're going to see it's going to come here and it's going to bring the map of Valley Stream. Now it's telling me the area medium income in my area where I'm at right now is $99,000. But in order to qualify for this loan, my income cannot exceed $79,600. All right, so that's 80% of that 99,000. You can do this for anywhere in the country to see what's your income. What's Westchester zip code, y'all?
10603.
All right, let's do 10. You said 10603?
Yeah.
10603. Why that's not coming up?
So don't do this like that.
10603.
10603. Damn, that shit ain't coming up.
10606.
Yeah, 07. One of them.
Damn, they ain't liking y'all.
That's New York City. That's probably why.
No, this is everywhere. All right, let me type in 11422. Let me just do Jamaica. Shout out to Queens. Queens get the money. Jamaica, New York. Okay. It works better with an address, y'all, but I'm just trying to give you an idea. So Jamaica, they pulled up Southside, but it's all good. So we got 99,500. The 80% is still 79,600. So you guys see how simple this is. This is the gross income that the lender is using, not your adjusted gross. We're not looking at the tax returns. This is your gross income, not your net income. Only way it's going to go for net income is if you're self-employed and you're trying to get one of these loans. But this is the first step that you need to go to see if you even qualify for the Home Possible or Home Ready program, because they both go off the same thing. So I wanted to show you guys what this looked like in real time so you are familiar with this. And this works best if you have an address. So if you're looking for properties and you're already pre-approved, just punch in any address in your area. right?
The
So that's
average income in South Jamaica, Queens is $99,000.
according to the government, the area median income in the area is 99,500. Correct.
That's interesting.
Very. And these houses are probably $1 million. Go figure. So that's the websites that you got to go to see if you qualify. And if you qualify, it's a great program. Both of them with Freddie Mac, which I love more than the Home Ready, is with Freddie Mac. You can put down as little as 3 to 5% with buying a 2 to 4 family property. Which with conventional products, if you don't qualify for these programs, you'll have to put down 15 to 20%. So I love the Home Possible program for that. And then also with the Fannie Mae Home Ready program, one of the things that I love is that they will allow you to use border income or roommate income to help you qualify even if you're buying a one family property. So if you're buying a one family, let's just say you was in college, you had a roommate, you can document that you had a roommate and the roommate is going to move in with you, right? Then you can have a quote unquote lease signed between you and that roommate. And if they're paying, let's say $500 a month, we can use 75% of that 500 to help you qualify. Now, a lot of you got roommates and you don't know, right? If you are unmarried and you have a boyfriend or a girlfriend and y'all live together, y'all roommates. Read between the lines. Back to the presentation. So that's the Fannie Mae Freddie Mac Homestyle. I hope y'all caught that little gem. Moving right along. Closing costs. Let's talk about some closing costs. Whew. All right. You know what? This is what I'm gonna do. Let's go back to this. Let me show y'all what a loan estimate looks like. Okay. This is what, yeah, some of y'all on YouTube got it. Roomies. Exactly. All right. So this is a sample loan estimate. This is what you're going to get from a lender. Some will give you this before you even sign a contract on a house. I know me and my team, we issue loan estimates only when you have a contract. If you want a cost breakdown, we'll give you what's called the closing cost worksheet, which is not a loan estimate, but it gives you an idea of what the fees are. So I want to show this to you so you guys can get familiar of what you're looking at, right? So on the top left-hand side, you're going to have whoever the bank is, the bank's address is going to show you the date that the loan estimate was issued. The applicants is you, what the property address is, the estimated property value. It'll tell you what your loan terms are, the purpose of it, what type of product you have. So if it's a 30-year fixed mortgage, it'll tell you that it was a 30-year fixed mortgage. If it's a FHA, conventional VA, one of these boxes right here will be checked. It'll tell you your loan number, your loan ID, and most importantly, is the rate locked or not, okay? And if it is locked, as you can see here on this example, it tells you until what time that it is locked, okay? Scrolling down, you have your loan terms, your loan amount, your interest rate, your monthly principal and interest payment. The principal interest is what you're paying back to the bank. It'll tell you if you have a prepayment penalty or not, if it's a balloon payment or not. You're not going to see this in regular traditional loans, so don't worry about that right now. If you have mortgage insurance, you'll see it right here on your projected payments. It'll tell you if it's mortgage insurance, and if it was, there'll be a number listed right here where it says 0. And then in this column right here, it would tell you what year it is projected to fall off. Very important if you're taking out loans with mortgage insurance that you are paying attention to this, right? Your escrow is to manage your property taxes and the homeowner's insurance. Escrow, let me say this, and I'm going to say this loud and clear for everybody who is listening. Escrow is subject to change on an annual basis. So whatever mortgage payment that you guys start off with today, that will not be your mortgage payment in a year because taxes will go up, homeowners insurance will go up, and that means your mortgage payment is going to go up. So although you have a 30-year fixed mortgage, the only thing that is fixed is that principal and interest payment. Your escrow is subject to change. Now, here's a tip. Every single year, you're going to get what's called the escrow analysis. The bank is going to send it to you. Please read it. Learn to understand that, because that is telling you exactly what's happening in that escrow account. Depending on when your taxes are due and where you live. Some taxes, some property taxes are due quarterly, some are done semi-annually, some are done annually. The town is going to send you a tax bill. Although the bank is responsible for paying it, the town still has to send you what the bill is for the upcoming year. When you see your bill, if you do not agree with it, you can call the town and start a process called grieving your taxes, a grievance. Okay, which can potentially lower your property taxes down. But that is a process, and it's not guaranteed to lower your property taxes. But I just want to make you guys aware of what is out there for you. And I want you guys to be aware that your mortgage payment will increase. So when you hear me screaming to the top of my lungs, like I've been for the past 4 years on the internet, don't be house rich and cash poor. This is one of the prime examples, because you thinking your payment $380 going to be for the life of your loan, and you'll get a rude awakening 1 month. You're going to open up your damn mortgage statement, and your payment's going to be $500, and you're going to be like, what the hell happened? So I want you guys to be aware of this. Be aware of this. All right. Scroll down. Estimated taxes and insurance a month. Again, this is subject to change. Estimated closing costs plus estimated cash to close. This is basically, and you see it says from the borrower. That means what you have to bring to closing. Now, when you guys are shopping for a mortgage, I want you guys to be very clear on something else. The lender only controls two things: the interest rate and block A on its top left-hand side, the origination charges. We do not control title fees. We do not control recording fees. We do not control how much escrow needs to be set up in that prepaid account or that initial escrow account. We do not control any of these fees. We only control the interest rate and the origination fees. So when you guys are shopping for a loan, you have to understand banks will sit here and present you offers in the beginning of your process and lowball you on purpose. They will miss fees on these loan estimates because it's not legally binding, right? It's just an estimate. They will tell you, and when you're trying to compare, you're looking at, well, this lender's rate is this and their fees are $20,000, but this lender's rate is the same, but their fees are $15,000. I'm going with this lender. But you don't realize that you're getting set up for the bait and switch, because a lot of lenders out there will put lower fees on purpose. I'm trying to tell you, this shit happens every single day. I don't care what no one tells me, because I see it personally when you guys are reaching out to me, asking me to review your loan estimates, and I'm telling you, there's a lot of fees missing here. All right. So please understand that the lender only controls this. So my advice to you, if you're shopping or comparing lenders, compare them with the interest rate and block A fees. That is going to give you a true determination if what lender is more expensive than the others, because that's the fees that they're making their money off of, not everything else. Now, if you want to know what your title fees and your recording fees are, this is when you got to go to your title company. If your realtor or your attorney is using a particular title company, you need to ask them for what's called a title bill. And in that title bill, you'll know what all the title fees are. You'll know what the recording fees are. You'll know what the estimated escrow account will be needed to set up based off of the closing date on the contract. You'll know all that information, because us as the lender, when we get to the end of the process, you see how this says loan estimate, right? This is in the beginning of the process. When you get to the end of the process, you're going to get what's called a CD, a closing disclosure. And the lender, to update that closing disclosure, they have to get all the final bills from the title company and all other parties involved. That way they can update that closing disclosure to make it as accurate as possible. So please understand the difference in this. Don't just be willy-nilly an emotional home buyer and say, oh, this one's cheaper than this one and this, that, third, and you're not even understanding. By the time you get to the end, it's going to be with that person who was higher, probably even quoted you because they were probably doing the right thing. So just understand the difference. And this is kind of why, instead of me showing you a PowerPoint presentation, I kind of wanted to give you an example, a real life example of what this looked like, because a lot of you have never seen a loan estimate before. I see people in the YouTube comments talking about they never even heard of Block A. This is exactly why I wanted to show my screen and show this to you guys so you have a better understanding of what these things look like. All right? We got it, y'all? Okay, good. Whew. All right, back to the slides. And we're almost done. So that's the closing cost section. Underwriting process. Now, after you go through your pre-approval, you shopping for your home, you're ready to go, you're going to now update your loan officer, he or she, and let them know that you have a contract. And then that's when you're going to get your initial disclosures. And as a part of that initial disclosure package will be that loan estimate that I just showed you. Again, look at the loan estimate. At this point, if you're still shopping for a lender, and I'm going to tell you this right now, at this point, if you're still shopping for a lender when you get the contract, you kind of behind the 8 ball because I think you should have did your shopping while you was in the pre-approval process. But if you're still shopping, again, remember, Block A and interest rate. That's what you need to pay attention to, okay? Now, let's keep it with interest rates real quick. Locking in, very important in these times. As you all have seen over the past 6 months, I should say, that the market has been going absolutely bonkers with interest rates. This is not the time to float interest rates. So there's 2 things you can do when you get your contract. You can either lock it in, and when we lock in for a certain period of time, y'all. We lock in either for 30 days, 45 days, 60 days, 90 days, up to 6 months, right? Or you can float, which means floating means you're playing the market. I do not recommend floating in today's market because it moves so rapidly. If you want to try to protect yourself, let's just say you lock in and you want to hedge your bet, so to speak, if the market does drop, ask your lender if they have a float down policy. Type in chat, float down, okay? Float down policy, very important. So let me give you an example. You are locking in today at 5.5%, okay? You're locking in at 5.5%, but your loan officer, after you consult with them and you say, you know what, we think the rates might drop a 0.5 point in your favor. It may drop to 4.875 to 5% in like 2 weeks while we're doing the process based off of what's happening in the market. So we can lock you in with the float down option. It may now a lender's going to charge you for this. So what this means is if the rate does drop that at least 1/4 to 3/8 of a point lower, then the loan officer can float down the rate and take advantage of the market decreasing and break you from that 5.5 to that 5.25 to that 5.1 to the 5%. But they may charge you a point for that. Now, for those of you who don't know what a point is 1% of the loan amount and it's used to buy down your interest rate. So $100,000 loan amount times 1 point equals $1,000. All right. So I want you guys to understand when you are trying to lock in, if your lender has that option, take advantage of it. It may cost you some money. Now, what happens if the rates don't decrease? Then you just pay the point for no reason. So you also got to understand the market and work with a loan officer who understands the market and is watching the trends that's happening in the market to determine if it's even worth you paying that extra point to do the float down option. All right. but speak to your loan officer for more details about this. Whew. So now you lock in your rate, you go to underwriting, you get your loan reapproved by underwriting. They're going to have what's called conditions. You meet those conditions. It could be updated pay stubs, updated bank statements. It could be letters of explanations. It could be whatever the hell the underwriter wants to see to satisfy the commitment letter. And once you meet those, plus you get your clean title report, you get an appraisal report, it gets submitted back to underwriting, and then boom. From there, they submit the loan for clearance to close. And in a perfect world, the underwriter will clear everything, and then congratulations, you can now schedule your closing. But the mortgage process is not perfect. I'm here to tell you. You will go through pain, you will go through agony, you will go through frustration. You will go through some BS. Okay? So have your expectations set properly that you are going to go through some pain and some BS. Even if you went through a pre-underwriting process, you will still go through the pain and the BS. This is just the business that we are in. It is not perfect, but you have to have your expectations set right. So once the underwriter, and be prepared to be asked for documents, the same documents a couple times. This happens with certain lenders. Not going to name no names, but this happens, okay? I need you to understand this is part of the process, and it will frustrate the hell out of you, rightfully so. But just give them whatever the hell they want, and let's move on, all right? And once you go through that underwriting process, you meet all your conditions. Congratulations, you are now clear to close, and you can go close on your house. That is my time for today, ladies and gentlemen. That's all I got.
There you have it. Better than college.
Whew.
EY University.
Give them what they want, man. Just be patient. Tell them that.
Be patient. Give them what they want, son.
Legend.
Oh my goodness.
That's legendary. Put some fire in the chat if you enjoyed that high level conversation, as my brother 19 Keys would say. That's what it's about, man. Not getting that kind of education anywhere, definitely not at school. And that's one of the things I always talked about, like buying a home is probably the biggest purchase that anybody's going to make. And for most people, that's their biggest investment. A lot of people, unfortunately, that's their only investment. And if you think about it, for the biggest purchase, the most important purchase, and something that most of your net worth is in for the average American, you have no education on it. Like they never teach you anything. It's like you just go out there and just hope that you're not getting taken advantage of, but you just go to a bank and you say, okay, I'm trying to buy a home. And you just follow whatever they tell you. You don't know if it's the best thing for you or not. You don't know about the program. You don't know the process. You make mistakes. You don't have your documents in order. You don't get the mortgage. You lose a home. It's a learning process. And you learn as you go, but you can make a lot of mistakes. So I always thought, like, why would they not have this as part of a core curriculum? Because it's something that is very common. A lot of people buy homes, and to not have any idea of how to do it, it just doesn't make any sense. So it's something that we never even questioned because we just were so used to just not even having it that it was just like, all right, just go with the flow. But now we have institutions like EYL University, and we have professionals like Matt who are very gracious with their time, and they're educating the masses. So do not take it for granted, because it's not something that has ever really happened before in a language that most people, especially in our world, understood. So just wanted to give kudos to Matt. Definitely, a legend in the game when it comes to real estate, financing, home lending. Very, very important. Very, very important.
Good.
Yeah.
I mean, he's the guy we call him for sure. And with any question, right? Like, and that's the thing too, being humble enough to know that you don't know everything, but having a resource that's almost like an encyclopedia at your disposal, it makes everything a lot better. And so I'm personally going through the process. And so every time I get a letter, the first guy I call is Matt to make sure everything's right. But everybody
6 a.m. calls.
everybody doesn't have that. And so having this type of information presented in front of you, it can alleviate that fear. A lot of times people get in that fear process where they don't want to take action because they don't want to make the mistake. But what's been laid out for you right here is a detailed version of what you need to do in order to get that first property. So, Matt, I appreciate you for, decreasing that level of fear for people to make that first step.
Yeah.
Yeah, no doubt, man. That's what we're here for, man. Each one teach one. And like Shadi said, no one taught us this in school. The school curriculum is not made for us to know this type of stuff. How our parents didn't even teach us how to do this because for the most part, they didn't really know. Most of our parents who purchased homes, they tripped and fell into home ownership. It wasn't like, you know what I'm saying, that was taught. So for me to be able to be blessed with the knowledge to be able to pass it on to my community at scale because of platforms like EYL University, it's life changing for me, and I don't take it lightly. I love, and this is why I always say my license number because I'm proud to be a licensed real estate professional. I tell people all the time, I'm not an internet guy. You just see me on the internet. This is what I do every single day. This is what my team does. We help a lot of people, and I don't brag about it. You'll never see me posting clothes and follows. You'll never see me doing boomerangs. Respectfully, I say that respectfully because everybody got their own swag, and that's cool. But I help. Don't get it twisted. MG closes a lot of loans, and I help a lot of people directly and indirectly. I help some of your favorite people that you watch all the time, and you'll never hear me chasing no clout because I know I don't do this for clout. I do this to help my people at scale because I am a terrible internet marketer. If I was really an internet marketer, I would flood your timeline with testimonials and all types of ish. But if you've been following me for years, you don't see that on my page. You see information all day long, information, information, and information. And I want you guys to execute at a high level. I don't even ask you guys for business for 90% of the time. I'm just giving you the information. And if you work with me and my team, great. Cherry on top. God bless. Thank you very much. But I don't do this for leads either. I do this because I want our people to own some shit because our home ownership rate is 42% in our community. And it's very important for us to close the wealth gap. Real estate is a major component of that. So we have to own real estate.
That's a fact. So we're gonna go into some questions. Before we go into questions, somebody said if MG had a book or a pamphlet or something, I would buy it. So he actually has even better than that, the real estate encyclopedia.
Well, he has a book too.
I was about to pull a book too, but we ain't gonna talk about the book though. Let's talk about what we're talking about.
So he got the Home Buyers Blueprint, Volume 1 and Volume 2, over 20 hours of content. So imagine this 1 hour. He got 20 hours of content, which literally walks you through every single thing, A to Z. And then Volume 2 is like the rehab pack, where you go over 203K loans, everything you know, rehab. It's literally like step-by-step blueprint on all things real estate and real estate investing. And what we did was originally that rolled out as a separate, and it's still a separate if you want that individually, but we packaged it together with EYL University. So anybody that's in EYL University gets access to Home Buyers Blueprint Volume 1 and Volume 2 as part of EYL University. And for EYL University, of course, we have monthly financial planning calls with me. We have weekly investment classes. Shout out to Chris. We have over 100 archive classes because we do classes every single week, and we have clubs. So people ask all the time, like, what's the difference between Earn Your Leisure at EYL University? Earn Your Leisure is like a public school. You can learn either way. That's the good thing. It's like you can learn either way. Public school is free. EYL University is more hands-on. It's a learning experience where we have Zoom calls, we answer questions. People actually learn from each other. It's a community. It's like, you know, I actually get to talk. I'm gonna do my financial planning thing once a month. Troy does the book club, movie club. So, I mean, it's something that we wanted to take the best aspects of school, but, you know, add our spin to it and just make the things that's really applicable as opposed to teaching you like, you know, about the stars and the moon and all that kind of stuff. Dissecting frogs and things that wasn't really necessary. So, and we did it at a competitive price point that I don't think anybody in our industry has ever been able to accomplish, to be able to do that at. And you know, we in a good vibe right now. We got Invest Fest coming up. MG is going to be at Invest Fest, and you know, it's good times right now. So we decided to just do a flash sale, 48-hour 4th of July flash sale. We'll probably run into like Saturday. and we're going to do 75% off, $4.99 for the whole entire year. And that's the lowest price it's been since Black Friday. It hasn't been that price since Black Friday. So literally 100 hours of videos, calls with me every month, Home Buyers Blueprint, Volume 1, Volume 2, book club, movie club, access to the Facebook group, access to the weekly classes, access to the weekly investment classes, $500. Like, that's almost impossible to accomplish, but nothing is impossible at EYL. So
that's a night out at TGI Fridays a month.
And we ain't, that's a fact.
Once a month.
That's a fact. So, you know, people always complain about stuff not being affordable. If you can't afford that, then it's just not the right time for you right now. You can just stay and just watch the podcast, watch YouTube, and you get a lot of information there. But if you just want to, you know, a little bit more of a higher education, your handheld, direct access to us on a certain level. Choice is yours. 48 hours, EYL University flash sale. I'll pin it. I'll pin the link in YouTube, and then I'll also put it in the description of this video. And the best part about these classes that we do is that we actually get to answer questions. So this is something that, you know, once again, you don't do that on a podcast where we actually, you know, take Zoom questions and we answer it. So it's just like being in a classroom. So that's what we're going to do right now. We're going to answer a few questions before we wrap. And
shout out to Renee, one of our top earners. I see she putting the entire pamphlet of things. They always in everything. Shout out to all our earners. Let's try this. Let's go Lucky 313. We coming to you. Unmute yourself. You've been unmuted. What's going on?
Can you hear me? Can you hear me?
Yeah, we can hear you perfectly. What's going on?
How y'all doing today, Black man?
What's going on?
Great.
How you?
My question, pretty well, thank you. Well, obviously, I'm from Detroit, and our market.
What up, though?
Our market appears to be extremely overpriced, in my opinion. I am currently looking for a home, and it's almost to the point where it's like, who are buying these homes and who honestly can afford them? Because when you talk to other buyers that are people that's not of a conglomerate, everyone is saying the same thing. You go look at a house, it's already kind of overpriced, $50,000, and you still in a bidding war. What would you do if you were in that situation?
Rent is overpriced too. Pick your poison. That's kind of the only thing you can do right now. We are in inflationary times. So ultimately right now, I understand your concerns, but maybe you need to start looking at home. And I'm taking that these homes are turnkey. They probably already renovated, correct? Fam, can you hear me?
Lucky, you there?
Yeah.
Oh yeah. Go ahead. One sec. I'm asking him to unmute himself.
Well, let's just say that they turnkey. Matt.
So let's just say they turnkey, right? Then you have to find something that's not turnkey.
Can you hear me?
Yeah, we hear you. So Lucky, is those houses fully renovated homes you're looking at?
No, man. You still have to go in there and put 60 to 100,000 in there to update it and make it the way that you would want it. Are they livable? Yes. But you will still need maybe a roof, windows. I mean, you still got to go in there and put work into these houses.
How much are these houses worth after your repairs?
They already overpriced when you buying it.
But no, the question is so if you buy it at whatever price and you put in 50 to 100K, how much is the house going to be worth?
That part, I'm not sure. From what it appears, before you put the 50 to 100 into it, you already buying a house with no equity. There's nothing left. There's no more room left.
So if you have no equity, then obviously that's not worth it for you to go into a home and then you got to still put that amount of money and you're going to be upside down. So I would probably say then you have to probably look in different areas to whereas you're not in that same position, because that's just not a good deal and there's nothing you can do about that. So you don't want to pull the trigger on anything like that. You just got to find homes where if you are going to put that money, that your after renovated value is going to be greater than what you put into it. So that way you're walking in there with some equity and you forcing that appreciation.
All right. So we
All right.
need to be patient. Thank you much.
No
Appreciate
problem,
you,
brother.
bro.
Appreciate you, bro.
All right, let's try this. Let's go to Jessica D. Jessica D, we come to you. Unmute yourself. You've been unmuted. What's going on with you? Damn, Jess.
Damn, Jess.
It was all good just 3 minutes ago. Jennifer, we coming to you. Jennifer, what's going on? Unmute yourself. You've been unmuted.
Hello. Good evening, gentlemen. Thank you for this.
What's up, Jennifer?
How you doing, Matt? Quick question for you. So, I'm a realtor at Martha's Vineyard. I'm in the middle of a deal now. Buyer client is buying land for 1.585. Appraisal came back at 1.4. I went back to the appraiser with comps to justify the 1.585. He discounted them. He said, no good. I'm representing the buyer. The seller's agent went back and said there are errors in the appraisal. So the bank listened to that and is ordering a new appraisal. So I'm curious to know from your perspective as a mortgage loan officer, what our chances look like of getting, how do you deal with this kind of situation, and what our chances look like of getting a new appraisal to come up with the right number so that the buyer client doesn't have to come up with more cash?
Man, this was an amazing question. I'm glad you
Great
asked
question.
that, Jennifer.
Yes,
Great
yes.
question, because this happens every day, unfortunately. So
Right.
first, I want the audience to know that the appraiser, when he does an appraisal report, he's giving his opinion on a value. His opinion is gold to the banks, and we're going to go off of that. You guys did a great job by contesting that appraisal, and the AMC, the appraisal management company, believed you guys and say, you know what, we're going to order a new appraisal. I will tell you from my experience, there's a 50, maybe I would probably say a 65% chance that appraisal comes in low too.
Oh, wow.
It is and it's a 30 to 40% chance that it might hit the numbers that you want. You have to remember these appraisers talk to each other. Number one, they all providing it's the same comps everywhere you go, and
Right.
a lot of appraisers, they're going to use the same type of formulas to either adjust up or adjust down when it comes to the adjustments and comparables and things of that nature. So there's a good possibility that this piece of land will get appraised for the same value or probably a little bit more. It's a good possibility that it probably won't get appraised for the sales price.
Yeah, you know what? That might even be something we need to just have like a whole class on the appraisal process, because I've had some experiences even now with some property that I'm actually building. Thinking that the square feet is going to be one thing, but understanding like, if there's no floor, then that really doesn't count inside the appraisal process. So even understanding the intricacies of that, because that could be a process that could make or break a deal and make or break the amount of equity that you think that you have in a property. So Jessica, I appreciate that question. That was a great one.
Yeah, that was the appraisal process is such a finicky process, and I want everybody to understand lenders do not control appraisals. That's number one. There's an appraisal management company, AMC, that acts as the third party person between the appraiser and the lender. That AMC is choosing from a round robin of appraisers that's approved with said lender, and then they pick that appraiser goes out, and us on the lender side, we have no clue who that appraiser is until we get the actual report back. So a lot of people always say it's the lender, it's the lender. No, it's not the lender. It's our hands are tied because of all the regulations that was put in place after the Wild Cowboy days. So that was a great question, but it's an unfortunate thing that happens in this market. And if you do get a low appraisal, then that might go in your buyer's favor. Now it's time to negotiate because now you got two low appraisals.
Right. Well,
And
that's what I told him, that we're going back to the seller and asking him to reduce the price if it doesn't work out.
Yeah.
Which is great for him. And I want, him to get a fair price.
absolutely. And it goes in a favor. My question is, what are they doing with this land?
Building a house.
Okay, so they what type of financing are they doing?
Um,
Or are they
an
doing
eight,
cash?
No, it's we do have a lot of cash deals, but this one they're financing an 80-20 loan.
Okay.
Yeah.
So they're doing 80% down and doing the rest of 80%
20%
financing,
down.
20%
Right.
down, and
Yes.
then they're doing acquisition and construction in one loan.
Yes.
Okay, smart
Yes.
play. I like that.
Yeah.
You know,
Yeah.
we
It's a
know
good one.
a thing or two about that, huh, Matt?
Yeah, we know a thing or two.
Yeah.
Good
And
question.
one more thing, Matt, I
Mhm.
live in Massachusetts, but you don't know that I grew up in Rockaway. Queens get the money.
Queens get the money. Let's go. You at the end of the Rockaway is the end of the earth.
The end of the earth.
The end of the earth. Shout out to the Rockaways.
Shout out to Jennifer. Thanks, Jennifer.
Thank you.
You're
Appreciate you,
welcome.
Jennifer. Queens get the money.
All right, let's try this. Regina, what's going on? I see you unmuted. How you doing?
Hey, don't be alarmed. This is brother Reggie. Hey, Matt, Troy, Rashad.
What up, Reggie?
Yo, Reggie, good.
So,
He's like, don't be alarmed.
Yo,
yeah.
you did the Netflix switch on us.
So I'm trying to house hack. So
You
long story,
EYL hack, man. What you talking about?
yeah, exactly. Yeah. So long story short, my mom's a real estate broker. We're trying to find multifamily properties back in 2019. We couldn't find any, but she found me an off the market deal on a single family house in the upcoming neighborhood. Now, I'm rehabbing this house right now, but I want to kind of do a 4-3-2-1. So my question for Matt is, can I move out of here, rent this place out, move with my parents, and then 4-3-2-1 from there?
Do you own the house you in now?
Yeah, it's a conventional 20-year on it right now.
What type of property is it?
Single family.
So you have a single family, and then you want to move with your parents, and then go buy multifamilies to house hack.
Yeah, rent this place out if I have to, and move with my parents and just get triplex, duplex, or what?
Yeah. Look. So, great question, bro. File the taxes properly while you're living with your parents. So make sure you show the single family property as an investment property on your tax returns. So that way, when it's time for you to get your multifamilies and the lenders say, well, you have this mortgage as a single family. No, it's an investment property. Look at the tax returns. It's on there. It's listed as an investment property. So that way, you buy your multifamily and now doing your house hack journey, that won't impact you at all.
Okay.
From that perspective. Now, obviously, depending on how much you deduct and everything like that, could impact your debt to income ratio and what you can qualify for. That's a whole deeper conversation. But essentially, to answer the question, if you rent it out and you file it on your taxes and show it as a true investment, you shouldn't have an issue with the house hack to start your house hacking.
Okay, great. So one more question for that. So I have to wait the entire year to get taxes back with my tax return to prove this, or can I do it before the year bid?
When are you planning on doing this?
I plan on moving out of here. I'm gonna place out by December.
I would say if you can get a tenant in there in this calendar year,
Okay.
because remember, if you wait till December to move and you get somebody in there January, now you in 2023.
Okay.
You know what I mean? So I would say wait. I would say if you can get a tenant in there, start paying you so that way you can file for 2022 and show it on there, then you're in a better position.
Okay, perfect. Thank you.
Appreciate you.
Appreciate you.
All right, let's go to Ashley. Ashley, we are coming to you. Unmute yourself. You have been unmuted. Hopefully you have a good night. What's going on?
Hey there, how are you guys doing?
We're
Hey,
great.
Ashley.
I wanted to just shout out and say thank you guys. I went to the Black Money Forum and I met you guys.
Shout out to Drew Bernard.
Oh, what happened to her?
What happened to her?
Damn.
No, can you hear me?
You back.
You back.
Okay, yes. So I went to the Black Money Forum and I seen all you guys out there. Really great information. Met with you too, NG. So thank you so much.
Appreciate you.
So I wrote my question in the chat, but I'm gonna go back and get it. So I have a few, but I'm currently on the process of trying to get myself together so that I can get like that pre-appraisal done in order to start looking and, just get myself ready. I found a lender And I'm currently working through that process. A question that I have is, can I go to multiple lenders at the same time? Or do I have to start with one lender and kind of like work from there?
For your pre-approval,
Yes.
you can go to multiple lenders at the same time. If you're going to have multiple lenders run your credit, I'll recommend doing it all within the same 24 hours,
Ooh, okay.
24 to 48 hours.
Mhm,
But I'll be honest with you, you don't need to go to multiple lenders once you know what you're talking about, right?
mhm,
You just need to go to one lender, know your scenario, right? So that's why it's important for you to be like the CEO, right? And understand the process and understand your debt to income ratio, understand what programs that you are pre-approved for. So that way, when you go to lender B and C, you can have an intelligent conversation with them about your profile, right? So I can say,
okay.
look, this is my FICO. I got a 40 over 42 debt to income ratio. I'm already pre-approved from ABC lender to get the home ready program with I'm doing 5% down.
Mhm,
These are my specs. A
right,
knowledgeable loan officer is going to hear that and say, "Oh, you know what you're talking about." Well, based off
right.
what you're
I'm
saying,
ready.
I can get X, Y, and Z for you. You know what I mean? What did they quote you? Oh, I can probably do that too, right? Without you
Okay.
having to go through the credit pulls. And that's when you get more into being like that interviewer. You know what I'm saying? Versus
Mhm,
the emotional home buyer where it's just like you're happy just to get several pre-approval letters and offers, and you're just like you're happy go lucky, right? And now multiple people don't run your credit for absolutely no reason.
no reason,
Um,
right.
so for me, that's why we did the Home Buyers Blueprint Volume 1 and Volume 2, especially Volume 1, to teach you guys how to be honestly, people have taken the blueprint and now they're loan officers because of the blueprint, because it taught them so much and now they got into the game, right?
Mhm,
So if you have access to the blueprint, so I would tell you go in there and study that bad boy. It's over 15 hours of great information, and it will teach you everything that you need to know: how to calculate your income, how to figure out your debt to income ratio. Hell, you'll probably be fine when you finish the blueprint. You can pre-approve yourself. You know what I'm
okay.
saying? Like, and you'll know exactly what you're doing. So
Oh,
I would say, can you, to answer your question, yes. Can you go to multiple lenders at the same time, run your credit, and get 3 different pre-approvals? Absolutely. But if you got the home buyer's blueprint at your disposal, you don't need that.
you don't really need that. Okay, perfect. I am an EYL member, so I'm gonna go ahead and get in there and take another look at that
Take
so I
advantage.
can get this
Take
done
advantage. We got,
myself.
we got
Absolutely.
this. We got the assessments after every chapter. You're going to be able to test your knowledge base, and then you got MG. You can always hit me up too because I respond to the earners every day, all day.
That
That's
is so true.
And
I know
that's
that for a fact.
priceless. That's
I know that
priceless.
for a
I
fact.
could
So
charge
I
y'all 20
appreciate
bands for
you.
that. I ain't gonna hold y'all up.
I hear that. Thank you so much. I have one more question, real quick. I
Go
know
ahead.
guidelines, just real quick. So, can you do a FH? I think you answered that already. You could do a FHA loan on a multi-property, on a multi-unit property. But here in Brooklyn in New York City, like everything is so expensive right now. What happens if can I don't know if we have like the Albany, the banks where you can kind of get houses that are on foreclosure and whatnot, but can you use a FHA loan towards a multi-property that might be on a foreclosure list?
Absolutely. Right.
Got it.
You can use an FHA loan for a burned down bando building and get the money to repair it.
Noted.
You can get 100% of your rehab costs. You can put down as little as 3.5% down. You can buy a burnt down bando and use a FHA 203K, and you have access to the Homebuyers Blueprint Volume 2, the rehab pack that teaches you all of that too, right?
Trapping out the bando.
Huh?
Trapping out the bando.
Trapping out the bando in my Rashad voice. The 203K will help you trap out the bando. And this is the perfect tool for
Yeah.
anybody, for especially first timers who are looking to become real estate investors. The
Right.
203K gives you that training wheels because you have what's called a HUD consultant. That HUD consultant acts like a construction project manager, and that person is there to protect you and the bank from the contractors, CON tractors, con artist
Mhm.
tractors, right? So it's a perfect tool to use. And I highly advise if you want to go that route, foreclosures, short sales,
Yeah.
rehabs, use that 203K for your advantage, especially in a high cost state like New York, where it is so expensive here to buy multifamilies. You have to find that rundown piece of crap house.
All
But
right.
the 203K is there to help you, and it's included in your membership. Take advantage.
All right. Thank you so much.
Thank you, Ashley.
No, no
Thank
problem.
you
Thank you,
guys.
Ashley. Shout out to
All right. Have a
Juvenile
great
with
night.
the Black Money Forum too. That was a great time.
All right. That was
Shout out to
fun.
Chew. Shout out to my guy Chew. Look, man, the Homebuyers Blueprint Volume 1 is worth at least $1,000.
Minimum.
Volume 1 and Volume 2, at least $2,500. So when I'm talking about Volume 1 and Volume 2 added, bundled together with everything else that's in EYL University, which we go over, and you get to ask questions for Market Mondays. That's the number one. How do you get to ask Zoom questions? You got to be in EYL University. For $500 for the year, it's never going to happen again. I promise you. I promise you, it's never going to happen
They
again.
corrected you. They said this is even lower than Black Friday.
What was Black Friday?
They said it was
I think it was $6.99, right?
yeah, $5.99.
$5.99.
Yeah.
Lowest sale ever. Then it's lower than Black Friday. $4.99 entire year. Homebuyers Blueprint Volume 1, Volume 2. Access to the Facebook group. Access to the Infinity Clubs. Access to my monthly financial planning calls. Access to the movie club and the book club. Access to the weekly classes that we have on Zoom every single Wednesday at 8 o'clock. Access to the weekly investment classes taught by Chris.
Access to my monthly calls.
Mm-hmm.
Those things going for 3 hours.
And we got an in-person experience that we
Crafting.
yeah, an in-person experience that's
coming soon.
Soon come.
Exclusive for EYL University members.
Oh, wait till they get that one. Oh my Lord. If y'all don't join now, just because of that event, y'all see InvestFest. Hold on, let me talk some shit real quick. Y'all see InvestFest.
InvestFest is going to be the biggest ever. Ever.
Imagine what we do for the earners.
InvestFest.com, man. When you could put the Mortgage Guy, 19 Keys, Ian Dunlap, Wall Street Trapper, Aristotle Investments, Chris Johnson, Kiana Watson, Milano, DJ Envy, Caesar. When you could put them, and then you add Steve Harvey, you add Charlemagne the God, you add Rick Ross, you add Circle of CEOs, all of them. You add TIP, you add Kenny Burns, you add Terrence J, you add Eric Thomas, the #1 motivational speaker in the world.
Terry.
Don't forget that.
Terry doing that thing.
Trade and travel.
And we you didn't even mention Dan Cathy.
Oh my Lord.
That's six.
Dan Cathy's worth $7 billion. He's the former CEO of Chick-fil-A. David Shands, Sleepers for Suckers. Ash Cash.
Wait, is it safe to say that Dan Cathy will not be the only billionaire in attendance?
Stay tuned.
Stay tuned. Stay tuned.
Get your VIP ticket. Get your VIP ticket. It's not fair. The fight fix.
That's the new line, MG.
It's not fair. What we doing is not fair. It's a missile strike. It's a missile strike. We have a missile strike, and we got a basement full of unreleased nuclear bombs. We got a basement full.
Yo, when that second wave come out, it's gonna be over.
We got a basement.
Yo, what Steph said?
That second wave gonna hit y'all like a tidal wave, a tsunami. I'm trying to tell y'all, man. I can't wait till we announce it.
So come.
InvestFest, man. Y'all need to be at InvestFest, man. There's gonna be a whole weekend of experiences. We're gonna have the official after party. Shout out to my brother Smitty. InvestFest,
Smitty.
Man.
Yep.
I don't even want to give it a comparison, but
there's none.
Every year it's going to get bigger and bigger, and it's going. The city of Atlanta.
Y'all know a demonstration.
Y'all need to actually at this point, Atlanta. We need to be compensated from the city because we raised the ticket prices last year. My barber, shout out to Bubs, he was coming from New York. and last minute flight. And he was like, why is the flight's $800 to Atlanta? It's like $200 flight. And he called the airlines and it was like, we're seeing an uptick for some reason. I don't know what's going on, but we're seeing an uptick in travel from New York. We raised the ticket prices last year. That's a fact. We are responsible for raising ticket prices. like, we caused the inflation in the marketplace in Atlanta.
And so, man.
ATL, man. Let's have a conversation.
Somebody hit up the mayor.
We could take this to another city.
This is true. Leverage.
Very true.
We could take this to another city. We got to look at the ticket prices for planes, for hotels, restaurants, hookah lounges, gentlemen clubs.
Forget about it.
Everything goes up that weekend. Everything goes up that weekend.
You know it's going to go up. That VIP dinner on that Thursday.
That's top secret. No, that's top secret. That's society stuff.
Look, man.
Man.
It's about having fun. We can't forget my Jose Canseco vintage.
We can't forget it.
I've become a fashion icon these days. And,
Yo, Shotty's a nut. I ain't gonna hold you, bro. I saw the Canseco earlier in the video. I said, oh, Shotty trying to kill him early.
Yo,
I've learned to embrace it.
Can't forget it.
You gotta embrace it. You can't run from who you are. And it's not, I always did fashion my whole life. So this would only make sense the next move. Wait till the next move that you see. It's called bigger.
Yeah.
It's called bigger.
Yeah.
Bigger.
Yeah. Respectfully.
Man.
You gotta have fun with it, man. If you're not having fun, life is too short not to have fun, man. That's why we do this edutainment. We mix education with entertainment and we put it in a blender and we just have fun, man. That's what it's about.
Yeah, that's it.
You know,
and you got EYL. That's it.
Don't take yourself too seriously. Gotta have fun with it. Gotta educate people. You gotta make money, and you gotta stay fresh at all times. That's very important.
Very important.
Drip responsibly. Very important.
Yes.
Drip or die.
It's the EYL way.
Yeah,
drip or die.
That's the new slogan.
Drip or die.
Y'all know our demonstration.
Get fresh or die trying. So I say that to say EYL University. If you're not at EYL University, you gotta question things. You got to sit down and start to question things in your life. $4.99, nobody else is doing that. Not one person. Nobody.
I'm going to be honest with you. This price point is disrespectful.
Yes.
For the amount of value that people get for this dollar amount, like we give more value than I think anybody. I'm not even going to hold you up.
Think out of it.
Matter of fact, we give more value than anybody. For the price points, this is the most affordable educational platform in the marketplace for less than a night at Pasha's in Atlanta.
Funny you say that.
Y'all know our demonstration.
I'm trying to tell you. Like, you go out with your home, you go to Chop House Times Square, you're going to spend triple that with your friends.
At least.
Yeah.
At least.
I had a bill for $1,800 at Chop House,
Shout out to Chop House
last weekend.
Glad I was sick. I don't miss those bills. Those bills, they come up, but you really think about it. That's one night of just enjoying with the family and friends. You can get 3 people. You can get 2 people at EYLU and a couple tickets for Vest Fest for that same price.
It's true.
Yes.
Priorities.
Priorities are important.
EYL train rolls along. EYL University is investing in yourself. Biggest investment you can make. Invest Fest.
Yeah, we will be there. So
it's called Stay Tuned.
I encourage you.
Every time we do something, we do it big. We went to Art Basel. We had DJ Khaled. We had Sean Poe. Like that's Sean Poe.
I ain't want the phone calls today.
Man. Y'all gonna see soon enough, man. Y'all gonna see soon enough.
Hey, the phone calls today alone.
Look, y'all gonna see soon enough. When Shotty hit me with the call today, I said, "Oh, really?"
But we had a call after that.
Oh, really?
Yeah. We hit you after this, Matt.
See, look, guys, this is real time. I'm not even updated on the other call that happened yet because they've been moving and shaking. I've been moving and shaking, right? But the call Shadi already hit me with was like, oh, I had to look at my phone. Like, damn.
Still in the meeting.
Still.
They call it the biggest
for a reason.
ever.
Still. Yeah, man. The best part is that the people here, they're gonna get to enjoy it. And we telling y'all firsthand because every time we talk like this, I know we're saying it in jest, but we're really serious. Like what we're about to deliver has never been done. And we're glad that our community is gonna be there to celebrate it with us because it's a win for all of us. It's a win for the space, it's a win for the community, it's a win for the world, really, because financial literacy, like I said, is a world topic. And we are fortunate to be at the forefront of it. And we take that very seriously. Well, we do it with fun. So
you gotta have fun.
Gotta have fun.
But we thank you guys. Thank you for joining us. As always, thank you for rocking with us. More information every single day. It don't stop. More information every single day. Just keep spreading the word. Subscribe, watch Rants and Gems every single Wednesday. Watch Earn Your Leisure every Tuesday. Watch Market Mondays every Monday. Watch
Inside the Vault
every Thursday.
Yeah.
High level conversations whenever 19 Keys decides to put episodes out.
We got Trapper this Saturday.
But yeah, this Saturday.
Yeah. Shout out to Trapper. I spoke to him today. His birthday is coming up. So happy birthday to my brother.
Shout out to Big Trap. Make sure y'all watch that. We just dropped the Rants and Gems with Jose the Credit Dude, talking about that business credit and real estate, man. So go ahead after this, go watch that. It's a phenomenal episode. So shout out to Jose. He's a certified gem. Sure.
Matt, breaking news alert. We gotta go, y'all.
Yo, peace, y'all. Peace. I gotta go. I'm a FaceTime, y'all.
Hey, pick up your phone.
You rocking with the biggest.
Pick up your phone right now.
EYL University 48-hour flash sale. Don't miss it. Go to EYLUniversity.com. Wait till you see what we're about to do. It's called Please Don't Play Yourself.
Ever.
Yo, congratulations, y'all. Have a good night. Be safe. July 4th, Independence Day. If you celebrate that, all that, oh my.